This is Marek Fuchs here today to talk to you about what went on with healthcare stocks last week and what went on with the financial markets, and more importantly to try to puzzle out what might be going on this week with both. Hey, there are several items that you have to take away from last week, and unfortunately none of them were all that appealing. Hey, look, the first is obviously the jobs numbers, which were a real feather ruffler, well below expectations. Now, you'd never want to get too caught up, too hung up on one set of numbers, but here's what we know here. This is part of a larger pattern of job numbers that show the recovery, if you can even call it that, to be stillborn, and we might really be headed to the brink of recession. We're really at this point dancing along the lip. And moreover, Intel and FedEx had cautionary words about their earnings and also the global economy. Now, this is really important because a lot of companies out there, well, they like to play economist. Not too many really do a good job. But Intel and FedEx historically have done a good job. They've been pretty forthright and fairly accurate. So when they both come out with words of caution, well, you should really, really heed them. Now, not much went on with healthcare stocks during the week. And we'll get back to Merck. We had a research report out from Zacks where they've reiterated a neutral and said basically that the stock was going to run in place where it is. It's kind of a Wall Street way of basically saying they have absolutely no idea of what's going on. And we're going to get back to Merck specifically in a moment. But enough about last week for now. A lot of market participants in the coming week are going to be clapping their eyes on Apple's release of the new iPhone. It's going to suck the wind out of the market's focus until probably Wednesday, but we do have some other things going on. We have Bank of America holding an analyst meeting, and that could drive the financial sector. And we have Merrill Lynch hosting a media conference where they talk about media companies. Now, because the media is interested in media, that sometimes has outside interest. And obviously, we're going to be hearing a lot about advertising rates. Now, retail sales are reported on Friday, and I want to caution you one thing about retail sales, especially this month. Gas prices have gone up, and that's going to pump up the numbers. Now, professionals know to back them out, but sometimes amateurs are a little bit taken by that initial appeal of the numbers. They seem bigger than they are, and they are, in fact, because, hey, look, oil prices ebb and flow, so you have to look at retail sales without them, okay? Also, obviously, possible news about Europe and China provide this like constant undertow for the market. Make it a kind of a dicey place at this point, because a shoe or the other shoe can always drop and from one of any number of directions. Now, traders are going to be looking too at signs that the Fed, especially after this jobs report, is going to be easing even more. Okay, quantitative easing. I'm sure you've heard a lot about it, and they'll look for signs this week that the Fed is injecting even more liquidity into the market. They've injected enough liquidity to raise the Titanic, and it hasn't worked yet. One danger to look at too is when you inject so much liquidity, eventually you have inflation, and that's a really destabilizing force as businesses can't really plan, and well, it causes a lot of different problems. And ironically enough, that's the one problem that our economy hasn't had. But hey, here's something to look at on the positive side, and that is Merck. It's yielding just about 4%, and as, well, perception and reality sort of goes on a slightly downward tilt, Merck, with a more reliable business, right, in healthcare, which tends to be seen as traders as recession-proof, or at least more recession-proof, and that yield at 4% make it pretty attractive. And sure enough, well, Merck had a good last couple of days of the week, rising a couple of points, as it appeared that the economy was, to be certain, a bit troubled. Here's also what we need to look at going forward in terms of healthcare stocks as we move away from convention season and into debate season. Look, until now, the market has kind of been assuming an either-or in terms of healthcare. Either Obamacare or its eradication. But it was always going to be more complex than that. Obviously, Mitt Romney installed essentially effectively Obamacare when he was governor of Massachusetts. And now, late in the week, he said some things about Obamacare that he liked, including provisions for coverage of adult children and several other items. So what we have to look at here is really try to get a bead on what form of sort of legislative superimposed structure we might have if there is a shift in the administration. Now, with these job numbers, we have to realistically look and plan toward a shift and how it might impact healthcare stocks. At first there was the assumption that it would be a big shift, but now Romney is making motions and who knows. So exactly, we'll get a better sense of that as we go forward into this debate season and we leave the sort of platitudes and the fluff of convention season behind us. So anyhow, if you disagree with me on any of this, and you won't, but if you do, feel free to Twitter me or tweet me at MarekFuchs, and please also feel free to tweet me any and all questions that you might have. I'll be certain to get back to you as soon as possible. Thanks for listening, and I'll talk to you next week.